this new episode of our series Dialogue with the Veterans. To introduce our today's topic for the discussion, I would like to quote Mr. Warren Buffett. Mr. Warren Buffett said, "The most important quality for an investor is the temperament and not intellect. You need the temperament that derives great pleasure neither from being against the crowd nor with the crowd." Yes, friends, you have guessed it right. Our topic for today's discussion is the behavioral aspect of investing. And to have this discussion with us, we have an esteemed guest, Mr. Vishal Kapoor, CEO of Bandhan AMC. Mr. Suresh Sadagopan, our Managing Director, is going to have this discussion with Mr. Vishal. So let's move into this discussion swiftly.
Good morning, Vishal. Thank you so much for accepting our invitation and coming for this discussion session around the book second edition of the book launch. If God was your financial planner. We hope to have some very interesting conversation, get your perspectives, and we hope that it will be very, very useful. And to start with, as a CEO of now Bandhan AMC, previously it was IDFC. Now it is Bandhan AMC. I want to know what is your, helicopter view or a 40,000 view of the MF industry, and where is it headed? I think the industry is doing quite well, and people are talking about 100 lakh crores at some point in time, probably 2030. So what's your view on that?
Firstly, Suresh, thank you for having me, and it's a real pleasure to talk to you and to your audience. So, it's great to be here. Coming to your question, I think you put it very rightly. I think there are industry forecasts out there that say that, the AUM of the mutual fund industry should be around, or if not have been more than 100 lakh crores. Keep in mind that many of these forecasts were done a few years back when we were still under 40 and we're already at 46. So from where we stand today, the 100 looks like, this is a number we should be able to cross before 2030. And definitely, I would think we should have, a much larger AUM in the industry by then. But more than the number, I think it's important to understand why this is happening. And maybe we can spend a couple of minutes on that, which is what really is going on that is bringing about this growth. So firstly, we must appreciate, the big demographic dividend that we are all reaping. These are interesting times for India, for all of us, because there is a larger proportion of our population that is going to be earning and saving, because the nature of our demographics is such that, with the higher income, actually the family sizes are shrinking a bit, which means that the expense per family is also going to keep going down, which means savings as a pool can actually go up. And of course, that will lead to higher consumption, but also higher saving, because your core expense in terms of number of people, number of household, individuals is going down, right? So that's one factor, which is the savings pool is going to increase more dramatically. Two is that within the savings pool, one of the trends that is quite apparent is that in the past, a large proportion used to go into physical savings. So real estate, gold, etc., used to be a large proportion. And that is definitely shifting more towards financial products, regulated products, and clearly mutual funds is a beneficiary there. So financial savings as a proportion of the overall pool is going up. And third is, like we mentioned, within the financial savings pool, mutual funds as a pool is going up quite steadily. So think about this as three fundamental factors which are helping the proportion of AUM of mutual funds going up. We are already at about 16% of GDP. I think the expectation is about 18-19% or so, but it can really be that, we can overshoot these numbers if we all do a good job.
Yeah, correct. So you are also a great believer of the demographic dividend now, which is actually happening.
Count our blessings.
Yeah. Correct. Very, very true. Very true. So now Bandhan has acquired IDFC, and now you have rebranded yourself as Bandhan AMC. And Bandhan goes back into this financial inclusion, I wouldn't really know about the financial education literacy aspects, but financial inclusion is something that Bandhan has been into. So now, what is the vision and philosophy of this new entity that you have come into now?
Right. So firstly, I just want to highlight that, the transition is actually a shareholding change. The entity remains the same, the management, the way they work, the products, the track record, all of that remains the same. So as a shareholding change, what has happened is that IDFC Limited, which was the 100% shareholder of the entity earlier, has sold its shares to 3 entities, not just Bandhan. There is Bandhan Financial Holdings, which is the sponsor as well. There is also GIC of Singapore, which is a sovereign wealth fund, as we all understand. And there is also Chris Capital, which is a very highly successful private equity firm based out of India and one of the oldest investors into the Indian private equity segment. Now, coming to our shareholding. So firstly, the benefit that we get is that the continuity in management, the teams, the schemes, everything just remains. So, the same office, the same people, etc. So that's the benefit to existing investors, to all our partners, the new investors, that, at a fundamental level, there's really no significant change in the way that we are managing the money that has been entrusted to us. But at another level, with 3 strong shareholders now coming on board for the AMC, like you rightly mentioned, Bandhan Financial has been, very, very well respected and known for bringing financial inclusions into the country. I think, they've been award winners. They've been widely written about the change that they have actually brought in getting access to formal finance to really the lower end of the pyramid. The people who otherwise would have been stuck without finance or stuck in a debt trap, and we've seen that transformation that Bandhan had brought over the last 20 odd years. So it's a well-established group now, has a banking license, operates as Bandhan Bank. And that is certainly an inspiration for our AMC, because as you're aware, Suresh, we've been trying to do a lot of investor awareness through various programs. We've been trying to bring in more inclusion. Our purpose in the AMC, even in the past, has been to get every saver to become an investor. So to really make the passive saving move into a more active investment. And this therefore resonates very well for the management team at the AMC. And therefore, we are trying to learn and see how we can really inculcate that, that spirit of inclusion into a much larger impact that the AMC can have through our products and services on the wider Bharat. Now, that's one aspect of what we see as an opportunity. The other aspects clearly are that with GIC and Chris Cap, who are long-term investors, there's the benefit of building very, very strong long-term businesses that we have with them as senior shareholders, and certainly something that we want to leverage on as well.
Yeah. Okay. Wonderful. See, you talked about the financialization which is happening today in the country. And you also talked about mutual funds, benefiting out of that financialization which is currently happening. Of course, the demographic dividend is adding to the allure. But at the same time, still we see money rushes in when there is a bull market, and it tapers off when there's a bearish market, and everything happens on basically near-term performance. What can we do so that investors continue to think long-term, stay long-term? So what do we do about that?
So I think interesting question, Suresh, and it's a question and a behavior that we've been trying to work on for at least the last 2 decades, if not more, right? But I think, we'd like to see this as a journey. So this is not a sudden change. This is a fairly large behavioral change. And from the experience that we've had over the last few decades, one would definitely, I think you'll also agree, that things have improved and have steadily improved. So the amount of volatility and the type of knee-jerk reaction that you used to see in the past, maybe 10, 15 years back, is definitely not the same now. And this has been, happening through a lot of good work that has happened across the industry, whether it's the manufacturers or the distribution partners or the media at large, regulatory intervention, etc. So with such a large program of investor awareness, investor education, as well as just sustained systematic messaging, I think we've achieved some progress. And definitely, if I were to look at some of the more recent trends, it's not as drastic or as volatile as what we've seen in the past. So certainly there is a new pool of investors who are still maybe reacting a bit more than they ought to. But there is also a growing pool of more seasoned investors with every cycle who are realizing that, you really don't have to necessarily focus on reacting to every market move to sort of, disrupt your plan or disrupt your, what you're setting out to do. And there's still more room to go. So more education, more consistent messaging, more illustration, simplifying the message. These are all things that all of us as an industry will need to continue doing.
Yeah, I mean, very well put and point well noted regarding the behavior. Very happy to know from you, Vishal, that things are improving. However, I want to stay on that behavior aspect. I think behavior aspect is the most important thing which we will have to work upon. I mean, the country is steadily growing in terms of the wealth accumulation among the citizens. So that is definitely happening. As long as we are able to ensure that the investor behavior is on the lines of actually helping them to create a good financial wealth, then we are on to a good thing. So I think the advisor role, apart from all the thing that you are doing, the advisor's role is also crucial here. We all need to work together. I mean, your thoughts?
Oh, absolutely. I think the advisor role is absolutely critical. And I think, a lot of data that we look at, which contrasts how, direct investors are reacting versus advised or distributed or, investors are reacting. I think you can start to make out some amount of behavioral differences in two. And a lot of this is publicly available, so you would have seen data which suggests that the SIP stickiness as well as the values tend to grow and tend to be much longer where it is money coming in through a regular plan being a proxy for some distributor or some advisor being attached. Can't say the same for direct because direct could have an advisor attached as well, but at a group level, at a pool level, that may have a lot more volatility. So, these are some data points that are telling us that the benefit of an advisor in hand-holding, in managing or helping you through is much greater. One of the things that I do note is that, a lot of with data information and so-called as what you think is knowledge being available at the click of a button now, a lot of us, start believing that, oh, actually, I have the information I need, so why do I really need an advisor or a partner? And that's where I want to point out that it's not about the information as much as about managing your behavior. I think we have to understand that, just taking a sports analogy, even the best of players, whether it's a, great cricketer or, the tennis stars or whoever, look around, even they need a coach. So it's not about your inherent knowledge or skill or talent. It's about someone who will be an objective guide or a mirror and tell you the way, objectively you need to see it. And that to me is a very, very strong role that an advisor or a partner plays. In addition to, of course, if you have gaps in understanding, knowledge, information, those are things that can be filled up as well. But all I'm saying is that it's not just about the information. So if you think you can get the best information by looking up a search engine, I would say think again. It's not as simple. Otherwise, everyone would be very rich and everyone would be making tons of money, but they're not. So, you do need a coach. Everyone needs a coach.
Correct. Sachin Tendulkar had a coach. I think all the top tennis players had a coach. And they were having a coach when they were still on top for several years in a row. So I think, the role of an advisor is actually pretty critical and crucial. So actually, very interesting survey that Morningstar had done a few years back, which showed what is the perception of the advisor in terms of their value to the investors. The advisors thought that their role is very crucial in terms of managing investor behavior. Whereas when you actually ask the investor, they were talking about maximizing return and various other things. I mean, moving in and out of proper assets at the appropriate time. And then this behavioral coaching or behavioral aspect where advisor tends to help, it came, very low on the thing. So I mean, while we all understand, appreciate on this side of the table that behavior is very important, the investor seems to be perceiving it in some other way, and it was very explicit in that survey. So, how do we reconcile this?
So a very interesting question, Suresh, and frankly, I wish I knew. You know, but you know, if we were to think, let's say, you know, why this might be happening, and I think we must appreciate that, you know, as a lot of behavioral scientists, economists will tell us, you know, biases are very real, and these are very deeply ingrained, right? And the cycle of greed and fear, just taking two very, very core emotions, is very difficult to get out of. And therefore, you know, for an investor, you know, when markets going up, you know, greed really being the driving factor and saying, oh, you know, how do I make more money than my neighbor? And all these other biases, you know, that we can read about, kicking in very, very, very strongly is natural. You know, nothing that, you know, that we should be afraid of. It's just very natural for us to do. And therefore, you know, this thing about, you know, bull markets drawing in a lot of investors, people really looking at, you know, almost unreal expectations from the markets around those times. And similarly, when there's a bear market, fear kicking in, you've lost capital, and then, you know, you go into a shell, and you lose any sort of, you know, any appetite for looking at it as an opportunity. These are just, you know, the way we are wired. Now, recognizing that and, you know, getting someone, like we mentioned earlier, a coach to help you recognize that is, I guess, what, as an advisor, we are trying to try and highlight. But as an investor, it's very difficult for me to see. So, like I said, I wish I knew, because it's just some of those things, one of those things we have to keep working on at. And hopefully with experience, you know, people get it. So I'm very, very confident and very hopeful that as investors go through a full cycle, they begin to understand and recognize. And, you know, as you mature, as we call it, and then maturity is not about age, it's about just having seen a lot more, being thoughtful about, you know, how you look at a cycle and being honest to yourself and saying, look, I got this wrong. As more and more of that happens, I think we do see a lot more mature behavior among investors. So an advisor, I would suggest, should keep highlighting the, you know, the objective truth. And we've all seen that, you know, when you get it right, you will always hold up your best investment bet and say, look, I was so smart. But you don't look at it holistically and say across a cycle where you're really smart and, you know, beat the market or beat the, or meet your objective, which is what you were trying to do. So these are just things we have to keep at. And hopefully with every cycle, investors will understand that it's more about behavior, not about really chasing the next best idea.
Correct. Absolutely well put. So financial education is the key, and you people have done a lot of work in terms of financial education. One Idiot was a path-breaking film. You did more than that later on. I mean, there were various training initiatives also, which at IDFC you had done. I'm sure that is all continuing at Bandhan. And there is a lot of information out there. I have written this book called If God Was Your Financial Planner. And there are so many people who have written many books. There are lots of blogs. There are podcasts. There are so many resources available. So beyond this, what can we do in terms of financial education for people, clients?
So again, I think we are still learning and we are still doing, and, you know, we just have to adapt to the changing nature of, you know, of consumption, of the demographics that we spoke about earlier. Right? So if we trace our own journey within the AMC, you know, when we looked at this challenge and saying, how do we get the message around some of the basics of investment through to people? And, you know, the PowerPoint or seminar way was popular, still very popular. You know, you get people into a room, you talk to them about some of these basics, recognizing that, you know, finance can be a boring subject. Numbers is not very easy for people to generally, you know, get attracted to. You actually run away from numbers. Yeah. And therefore, to get and hold people's attention through a seminar where you're going to talk numbers and finance is going to be difficult. So we approached it slightly differently, where we said, look, let's try and, use what Mumbai is famous for what we see around, which is use a movie, because a movie is a very engaging way to sort of tell a story, and through a story get a message across. You can see some of our movies in my backdrop. So whether it was Bachat, Nivesh, Bharat, or the One Idiot series of movies, they've been very popular in getting the message across in a more engaging manner. A lot of people even today, use that very effectively to get the core concepts of saving, investing, discipline, and also through Return of One Idiot, what happens if you don't get it right? So both greed and fear, the entire range being played out through the movie. So that was one way to do it. In terms of greed, we also brought out the SIP pen, where you just understand more visually the concept of compounding, of when the
That was a
same
brilliant
amount of
idea.
investment.
That was a brilliant idea. I mean, it is in your
So,
hands, and brilliant.
Yeah. So we are still at it. It's still right in front of me. I still use it, right? Because you have to keep reminding yourself that compounding is not natural to our brain. We think linearly, and we don't appreciate how the compounding value can pick up. So just reminding yourself of between 5 years and 20 years, how numbers can dramatically change is just an important thing for us to recognize. That helps us inculcate the discipline about both long-term and also starting early. It's just a good reminder to say, look, why it's so important to start early and give yourself a longer period of time for compounding to play out. We've tried now, you'll see, in my backdrop, Sam Ki Samasya, which is a workshop base where you get, investors to actually solve the problem. And hopefully by doing it, as they say, you learn the best. So when you try and solve Sam's problems, you hopefully get the message across. We are working on a whole host of other such ideas, moving with the times. So if you look at the millennials, the Gen Zs, where are they spending the time? How are they consuming their information? And what can we do there? So our next project is really around that. We should be launching it shortly. But the idea is that, how do you stay relevant and talk the language of our new age customers? And, try and hammer. The message is the same. The message has been the same for many years. But how do you deliver it in a manner that can be understood, can be simplified, can be therefore absorbed more effectively? But like I said, this is a journey. It is not something that I think anyone can hope to master.
Yeah. So now we are coming to the end of this discussion. So now you have actually shared a whole lot of things, from financial education to your vision to the behavioral aspects and the demographic dividend, and a lot of things you have talked about. Now, from Vishal, who has been at the helm of, a company like Bandhan, I want to know, what is the advice, probably that one or two gems which will go to the investors at large.
You're asking, there's too much pressure, Suresh, but I can only share, some of the principles, I try and follow. If that helps someone, then I'd be happy. But firstly, I think to me, as in, you understand that you have to save, and then you can save and try and build up good pot. It's a good start. Please do that if you're doing that. But it really helps if you can then start allocating the saving towards specific goals. Because the moment you do that, when you attach a goal to your savings, so it's not one large pot and your objective is not just let me make the best return, but the moment you allocate it towards goals, saying, this pot is my retirement pot, this pot is for buying an asset, this is for a child's education, etc., it really helps me, not get swayed in by market moves as much. Because then you remind yourself that, this is for 20 years or 30 years or 10 years, whatever it is. So why am I reacting too much to the market? So attaching a goal does help me in terms of, not overreacting to market moves. That's one. Second is, I think, with every cycle, you will appreciate the power of diversification and not being overly concentrated in one asset class. Sometimes we can get so swayed by one wave that we either become too greedy or too pessimistic, and we move our money into just one or two asset classes too dramatically. And at least for me, I'm not a very big risk taker in that sense, and therefore a slightly smoother ride is preferable. And if that is the case, then having a diversified portfolio rather than a very concentrated portfolio does help. And it's one of those things which is free. So you are reducing risk without losing too much, because over the long term, as I think a lot of studies have brought out, diversification is the single largest factor that influences your portfolio. Not as much your timing and product selection and this and that, the things that we end up spending a lot of time on. That really doesn't matter. It's really how much of that did you have, and what proportion makes the big difference eventually. So that would be one. Third thing I do think that that helps me is to keep my expectations modest. Because I think as a wise person said that happiness is equal to your results minus your expectations. So if your results are not in your control, if you can at least control your expectations, you'll be happy. If your result was, let's say, 15% return and your expectation was 20, you're unhappy. So just keep a more reasonable expectation and you will end up being happier. And to some extent, therefore, I think having a realistic expectation from money is important. I think we can get swayed too much and unfortunately just let it be too large a part of your life. To me, life is a lot about balance. So let's not have money being the only thing that we are after and chasing and be obsession about. And if you keep your expectations modest, I think we'll end up in a better place.
Wonderful. You are not sure what is the words of wisdom. But actually it came out loud and clear. So thank you so much, Vishal. That was really, really helpful. The last point I think is very, very helpful to me. That you have to keep your expectations realistic. I think that is very, very important for people to know and understand. So thank you so much for coming for this discussion. Absolutely enjoyed talking with you. I'm sure the viewers and investors will find this discussion very useful and engaging. Thank you so much, Vishal. Thanks.
Thank you. Real pleasure speaking to you, Suresh. All the very best.